Hello, dear traders. This is Alex Gerchik, and today we have one of my favorite lessons. It's the buyers and sellers. The reason, basically, why our first webinar, which was last week, was about the levels for one simple reason: for you to understand what the levels are, how the moves basically are getting against those levels. And today it's going to be a very important lesson: how I identify the buyer and the seller. I'll start basically with a very unusual thing, which I would say nobody in the industry is using, and this is about marketplace. And today we're not going to talk about the stock market or a forex market. In the beginning, we're going to have a totally different conversation about food market. Just for you to understand, imagine yourself in a food market, and just for you to understand, once you're going to understand how the basically buyers and sellers operating, it's going to be very easy for you to make a projection on a regular market, and a stock market, forex exchange, or a futures market, or anything you trade. It does not really matter. But just for you to understand, there is always a buyers, there is always the sellers, there's always the people who wants to get out from the position, and always a people who wants to accumulate the position. So the most important and the most amazing part, if you're going to understand how operate the big guys who wants to either buy or get out from the positions, you will understand how the market is performed. So figure out this. There's a marketplace, and there's a food market. I'm sure in everywhere you live, in every single city, in every single country, there's a marketplace. They sell everything: eggs, meat, milk, whatever you can imagine, they sell. Same as in the stock market. There's IBM, Microsoft, Google, Apple. There's a British pound against euro, British pound against dollar, dollar against Japanese yen. It does not really matter what it is. Just for you to understand that the stock market basically and charts, they were made when the Japanese people was basically have a marketplace for the rice. So in order basically to see the market price for the rice, they come up with the charts. And before, I mean, everybody using the candlestick who likes it. I use bar chart, but does not really matter. But just for everyone to see how's the stock market is moving, I mean, how's the price for the rice was moving. Everybody was watching it, the price for the rice, and everybody see it, at what price they should wait, at what price it was turned around. That's basically how the chart came out. So today we're gonna be no difference, and today we're gonna talk about the marketplace. Let's figure out one thing. You come, there's a marketplace for the tomatoes. Just for you to understand how the big buyer can work. Let's say, for example, one thing. There's a multiple sellers of tomatoes, and usually that's what the marketplace, same as the market makers, same as the seller. There's always like one big buyer or one big seller in the market, and there's always a little small guys who basically just want to sell that part and get out. Same as in the stock market. It absolutely listen. Figure out this. Right now we're talking about the marketplace for tomato market. So figure out this. You're a big buyer. What can you do? If you understand, and you will understand how the big buyer works, basically you'll easily understand how the things works in the stock market. If you're a big buyer, what can you do? You can do practically everything. Figure out this. Figure out this. There's 50 different sellers of the tomatoes. Don't even count how many buyers is there, because there's always for selling, there's always the buyers. So it does not really matter how many buyers are there. We are talking about only sellers. And there's one big guy who wants to basically control the market. And it's usually a guy who basically accumulates a large position. What this person can do, since he is one big person, he can do anything. So imagine one thing, and you'll understand after a few of my words, you will understand how the big big clients who run a position, how they work. So figure out this. There's a 50 multiple seller. Everybody sell a different one. Some of them sell good tomatoes, some of them sell worse tomatoes, some of them sell perfect tomatoes. But the price on the market between, let's say, 250 and 350 per 1 kilo or per 1 pound. It's irrelevant. And figure out this. There's one big buyer who has plenty of money. He has all the money to buy all market. So what he has choices to do? First of all, in order to dominate the market, you basically got to buy it all. When you have it all, you can dominate the market. You can do anything with the price. You can drop the price. You can up the price. That's what a lot of people usually in advance, usually did before. They used to buy tons of tomatoes, and then put it in the market, either at the higher price, either at the lower price. When they said at the lower price, basically to cut the prices for everybody, and if they want to do higher, it means they're controlling the market. So same is in the market. For example, as I said, there's a 50 different players who is selling the tomatoes. Prices between 250 per 350 per kilo. Basically, as you know, one thing for a fact, the price is holding under one circumstances. When one person wants to sell it all, he was always going to sell at discount, because nobody wants to stay the whole day and they have no chances. Maybe they're not going to sell it all. So basically, they want to sell it either all at once, either at least a big chunks. So big buyer can come and buy from them in quantities. He comes to everybody and say, listen, you sell for $3.50, I'll buy from you at $3. And you sell at $2.50, I'll buy from you at $2.25, I'll buy it all. So what's going on in the market? Once basically he bought it from everybody, and just remember one thing, big buyer can only buy a position and hold the position and take the position only against the sellers. And that buyer who buys the position, at one point, he's definitely going to be a seller, 100%, because he buys for one simple reason, to sell for the future and sell obviously at the higher price. Either he basically is a short seller who's basically trying to accumulate position for the short, to sell all of it and to buy at the cheaper price. It's absolutely the same. So what he does, he buys all, and now right now he's the one player in the market, and he can do anything he wants. He can put it for $4, for $4.25, and every buyer who comes to the market, they have no other place just to buy from him. So he controls the price. That's how it works in a stock market or in a future market or in basically in an exchange. If there is a big player who wants to build a position, he has millions of different ways to take your position away. Millions of different ways. So right now we're going to go a little bit different, and we're going to figure out what kind of buyer, what kind of seller, and where are they. So we're going to right now go to the pane, where I'll try to explain for you how basically the marketplace works. Figure out this. This is the level. Level we call price. It does not really matter. What is that? We're going to call it the price, and we'll put it the price of, let's say, 50. This is 50, just a number, just for you to understand. Okay, first of all, what we have? We have buyers. What kind of buyers we have? Buyers, there's 1 and 2 and 3 and 4 and 5. Okay, now I'm going to show it to you just for you to understand, and then once we go to the chart, you're going to understand where each one is participating. So what do we have? A buyer. Buyer. What kind of buyer we have? First buyer is a long buyer. Long buyer. What is the long buyer do? Basically, he buys when the price goes, for example, right here. If the price goes above the level, right here, he's a long buyer. For one simple reason, this is the buyer number one. Why? Because if we cover and we stay above the level, above $50 a share or $50, we basically have all the chances to go up. Sorry. So he thinks if he's going to buy low, he's going to sell high. This is called a long buyer. What does the long buyer do? He buys long. He wants to sell there. Where this buyer is going to get out, this buyer is going to get out right here. For one simple reason, because he's put in the stop order. So basically, buyer, long buyer, at one point is going to become seller. Sooner or later, he's going to become seller at two different reasons. He's going to become seller here, when basically his price is going to increase and he's going to start make money, and he's going to get out here if the price is not going to reach his price, and he's going to have a stop loss right here. He's going to get out. Second one, there's also a buyer, but unfortunately this is a different kind of buyer. This is the buyer which is called short cover buyer. What is the short cover buyer does? He covers the short position. For example, if this was a sell, the short buyer would obviously cover right here, right above the level. Short buyer expect Totally opposite what the long buyer does. He expects the price, it's going to collapse, and he's going to buy it at the obviously at the cheaper price right here. So at one point, short cover buyer, it's going to become two different kind of buyer. Either he's going to buy right here to cover his short, either he's going to be right here to buy it to cover his short as well, but it's totally different. If here he's not worried about, for one simple reason, because the price going his way, right here he's going to worry about. Same as this buyer. If this buyer bought it here, right here, anything above that level, he's not worried about. But once the price is going to break $50 to the downside, the long buyer is going to start to worry about it. So each one of them have a zone of the comfort where basically they feel comfortable. If the buyer feel comfortable right here, in every possible way in this zone, that once the zone is going to be broken, that buyer is not going to feel comfortable at all, and he's going to try to get out. So basically, once we're going to identify all of these buyers, I will explain for you how the move are created and why, for example, if the price for the market or price, let's say, for the British pound is going to go lower, we're going to explain why and why did it happen and why this move was initiated. The most important thing when you trade, you have to identify why the move was basically created. Once you're going to understand about buyer and the seller, it's going to be much easier for you. Then we're going to go right now to the seller side. Obviously, there's a seller, long seller. What is a long seller? That's the person basically who buy and who sell in a breakdown for one simple reason. He wants to get out. What is a seller long? That's the person who basically was a long buyer, who bought the stock, and who is selling his position. It's somebody basically right here, he bought it here, and he's selling right there because he had the long position, he's selling the long position. Obviously, if he's going to sell here, he is also long seller because he longs the position, he owns the position, so he's going to get out. And then another one, what we have, this is the short seller. Short seller don't own any position, and he's going to sell right here for one simple reason, because he thinks if the market is going to break down, he wants to participate in the short side, and every position is going to cover. Seller long is the opposite of the buyer long, so they close the position with the buyer long, with the seller long. If there's a short cover buyer, he covers the short seller. So right now, what I want to explain for you, one simple reason. I'm going to draw another painting, and you'll understand. As I said before, this is the level, our big fat level. And you should understand one thing. For example, imagine one thing. We're going to go again. Big buyer who basically bought the position right above the level for one simple reason. You know one thing for a fact. If we buy above the level, because there was a strong move, and we try to identify that move, that's what basically, hold on one second. That's what basically happened to us before. We went right here. We cover our previous sellers. We bought it here, and we expected to go much higher. That's how the long buyer goes. Long buyer obviously is going to put the sell stop right below the level for one simple reason, because if the price is not sustained, then it's going to look like a false breakout, and he wants to get out. If, as I said before, long buyer, he's going to try to get out somewhere here to make money. And if you see the market is basically turning around from this side, it means no more buyers. So the most important thing, you have to finalize who's going to create the move. Now we're going to try to create the move. I always like to paint myself a picture to figure it out what exactly I'm going to do when the market is going to perform. So that's what our level, and we figure out one thing. For example, why the move is going to be created. Figure out this. We cover, basically we were going before, as you see, we were going up, and up, and then basically we broke in this case, it was a resistance level, we call our level, and the price basically stayed above the level. Once the price stays above the level, what we're going to have? How we're going to generate the move? First of all, as we said before, we had a lot of short sellers who were selling it here, and obviously everybody's putting the stop right here. So we're going to generate the move of the short sellers. That's the one thing. Second thing, once basically the price stay above the level, this price is going to be generating long movers who basically buys right here. That's how the price is generated, and that's how the price is moving. The price is moving for one simple reason. If there is a short sellers, they have to cover, and there is a long buyers, they have to buy. For you to understand, if there would be a short seller right here, he would not let the instruments go much higher. So basically, in this case, what we figure it out, that we never trade the price when the price is moving. For example, if this is a running train, we're not trained to get in. We're only trading when it stops, when we understand the picture. And this is the most important thing to understand. You gotta move only when the buyer is a seller. You have to see if somebody is winning. So right now we're gonna go to regular picture to figure it out, the levels. So figure out one thing. We're pretty much using the same picture, picture for you to understand. So we're gonna go one by one. This is the a picture which has levels, and just for you to understand, the levels we explained in the previous lesson, and all of these levels, as you can see, breakout, 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 stop, 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 breakout. So what do we have? We basically, the most important thing for us to identify a buyer or a seller is to identify the right levels. Since we have a first lesson before, you already understood how basically the levels are working and basically how to draw them. So figure out one thing. Let's say make it a little bit bigger picture, and I'm gonna hold on one second. I'll save this picture, and I open it. Hold on one second. I open this picture in Paint. Why I open this picture in Paint? So we can basically draw what we have in this picture for one simple reason. Take a look. We'll take a very simple level right here. We'll take this level. It's the same level. And we'll take this level. What do we have on this level? As you can see, it was a false breakout. So obviously, right here in this level was a lot of short sellers who was selling the market. Why everybody's selling the market? Because it was a breakdown. After that, we're going to go to a real picture, and I'll show it to you in the real charts, and you'll understand my point of view, and I'm sure you'll appreciate it. So what do we have? As you can see, it went all the way down, and everybody wants to buy it. That's not an answer. Everybody wants to sell for one simple reason, because the people don't know if this limit buyer, as you can see right here is a limit buyer, it's going to be sustained. Is he's going to hold the rally, or he's not going to hold the rally? So what's going on? It's going down, as you can see, false breakout, but only after it came back, we only at that point know there was a false breakout. As you can see, it went down, it broke down. It basically, what it has right here, this move was generated by two players. First players had the sell stops because there was a long buyers. Somebody was buying here, just for you to understand. For buyers, there's always a sellers. So everybody buys and everybody sells. So in this case scenario, everybody was trying to sell for one simple reason. It broke it down. But once basically we stay right here at this level, there's always a buyers and the sellers. And buyers put a sell stop right here. So the first move was generated. The first move was generated because the buyers and sellers met. At this level, we always know who's going to win. So that's what I'm telling you. You have to figure it out where the stops and how they work and who's generated the seller and who's generated the buyer. What do we have right here? As you can see, nobody wants to sell. You see buyer bought it all here, and that's why he took it higher. So what's going on here? Once the price is going to go here, we know one thing for a fact. There's going to be a lot of sellers who are selling it right here. They're going to be short cover sellers they're going to basically be a buyer, because they have to buy, because they have to get out. For example, same is like a car. If you bought a car and you need to basically get out fast, you're going to drop the prices. So what it is, the short sellers usually very aggressive buyers for one simple reason, because the circumstances allow them to buy or to sell only when the price needs to be met. So what it is, once they're going to go right here, they're all going to buy for one simple reason, because they don't know where the next level is going to be and where they're going to get out. So just we figure it out in this picture that the most aggressive buyers is the short seller. The most aggressive seller is the long buyer. For example, if you see somebody was buying it here and somebody was buying it here, they're obviously going to sell right below the level. So you're always going to figure it out. There's a market buyer, there's a market seller. This is the market seller, this is the market buyer, and this is the limit seller. As you can see in this picture, they're not allowed a big buyers to go above the level. It means, and if the price is holding in a horizontal line, there is always a limit seller who would not allow a big buyers to break it through. What we have right here and why basically the move did not go higher. Take a look. In this case scenario, there was a lot of buyers and sellers right here, as you can see, because the price is practically at the low. When the price is at the low, it's always attract different kind of buyers who think that the price is way too cheap. So basically, if the price is too cheap, they want to buy. For one simple reason, why they buy? Because they know if something goes wrong, they know where to get out. And as you can take a look at the line, I'm just going to draw it a little further down. Take a look. You see? Once basically they were trying to buy, that's why I generate the moves. So you're always going to figure it out how they work, buyer versus seller. This is the limit buyer again, the limit seller. You see? It would not allow it to go higher, it would not allow it to go higher. Once the big position is accumulated, there's a big buyer. Take a look right here. See? He breaks, but the most important thing, he stays above the levels and generating the long move. Now, we're going to go to a real chart, and I'll show you one by one what's going on and why basically there's a big chance and who's going to buy and who's going to sell. We're going to start right away. Let's say, for example, with the gold. What we have with the gold. As you can see, all of these levels, if you follow our video recommendations, you can basically see that this level was drawn way before in October. So this level has a length of almost 1 month. It was a false breakout. What's going on? Take a look. Everybody was selling, everybody's selling, and somebody's buying. And just for you to understand, everybody sells a lot of contracts. There's one person right here who buy them all. So obviously you should understand there's a lot of sellers, because every level that's been broken is a lot of sellers, and there's most of the time, one big buyer who buys the position, who accumulates the position, who knows where the market is going to go. Big guys, the guys who makes money, they always know where the market is going to go. They maybe don't know the price, but they know supply and demand, and they know basically the price is going to go higher or lower. So what's going on here, as you can see, this level, everybody was selling, and this guy is trying to buy. Then he shows that every price stay above the level. So on, he is shown there is a big buyer, and he was not willing to drop the price any longer. Why? Because if the price is going to drop below this level, everybody understand that this is going to be a retest of the new low, and nobody wants to be here. Second part, where he shows that he's a big buyer. As you see, we had another line right here. It was the first stop. You see, that's how we draw the line. Everything, you see, it stays above the level. So big buyer shows that, guys, I'm not willing to sell. I did not make my money yet. I'm willing basically to buy some more. I'm willing to hold the price, and I'm willing to go higher. That's the person who's trying to buy all of it, because he knows if we're going to go in the beginning of our conversation, that you figure out one thing, that he goes by those who buys tomatoes in the market. He buys everything from everybody. As I said before, we never trade the moves. You see, we never trade the moves. We only trade the levels where the price stays, and we only trade above or below those levels. That's the most important thing. If we see the price stays above levels or below levels, the only way we can figure out the buyer or the seller wins. So for us, the most important thing is the levels and to see how the price behave. Just for you to know in the future, most of the time, if stock market is growing, or then the price for the gold is going to drop. So you see in this case, the same level stayed at 1249. You see the most important thing at 1249. Let's just go with a little bit smaller time frame. You see that's the price of 1249 came out, and that's what it is. You see it shows to you there is a big seller is selling the position. So then why are you always using the daily chart? Because only in the daily chart you can figure it out, the full price of the move. Then we're going to go, let's say, to euro dollar. What's going on with the euro dollar? As you can see, this is obviously whatever is going on. It happened to the positions about the election of the new president of the United States, Donald Trump. So what was there? Everybody did not understand what's going to be. So basically you have a huge volatility. But if you take this away and you take this volatility away, we came out to the same level where we're going to be. What is the crucial for us? Take a look. This is a very crucial level. This is the very crucial level, 108.89. You see, 108.89. This is the very crucial. Sorry, this is not. $108.59, very crucial level, and we can see if basically the euro will hold on right here, right below the level of 108.59, which it looks like it will, then we're going to have all the opportunity for the euro to go much lower. So what it is, usually the levels that we're drawing, they helping you out to figure it out who is winning, buyer or the seller. As you can see, I'm telling you right now in a real life, so you can follow it and see. What do we have today? We had a false breakout, you see? After false breakout, usually the price is supposed to go higher because that's the nature of the false breakout. If right here, we basically got the price and the price is not going to go higher and we're going to go right here to the low side, then we have all the chances to go much lower. So what it is, if you don't have an impulse, fast move after the false breakout, you have all the chances for this pair, for the dollar euro, to continue to go lower. So what we're doing right now is we're doing very simple job. Right here, if somebody bought it here, you have to wait until it's going to go to the next channel. But for now, it does not look like euro is going to be strong. So what it is, if the euro is going to stay below 108.59, we have 90% chances that the euro is going to drop very big because nobody wants to buy it. What's going to be here at 108.59? Sellers are going to start generating the short positions, and a buyer, don't forget, somebody was buying it here because right here they're not losing money yet. So somebody who is buying it, they want to be right here, they're going to get out. So as I said before, the most aggressive buyers is the short sellers, and the most aggressive sellers is the people who are buying it, let's say euro, hoping that it's going to go much higher. Let's go to the British pound. British pound actually looks very strong. You see it looks much better than the euro, and the British pound looks extremely strong. And if British pound it's going to break right here, hold on 1 second. You see, if British pound is going to go 126.13, which it did today, then it has all the chances for the British pound to go back to 127. So what it is, every single level that's withdrawn, as you can see, it helping you out to figure out there is a buyer or is a seller in the position. And every time you got to figure out who buys, who sells, why, when they're going to cover, what's going to be, and who's generating the position. So right now, when I draw for you, I'm going to come back in a few more minutes. Right now, when I draw for you in the paint, I showed to you how basically the buyer seller works, because the most important thing, first of all, you gotta basically begin with the drawn on a daily chart levels. Once you're gonna understand how those levels works, then you're gonna figure it out who's basically winning. Is a buyer winning? Is a seller winning? And what's going to be? Obviously, you should understand, and I'll show you the one more time the picture. There was a channel, and everybody is right here in this channel is trying to buy, and some people they're trying to sell. So we only can figure out the buyer or seller is winning for one simple reason: if somebody is basically is going to take the position above or below the level. What's going on here? You see, we broke the level, we went higher, but the most amazing part why we had a long signal is we stood up above the level right here, above 123. Once we stood up above the level, we showed there is a buyer who does not want this level to be broken to the downside. And you understand, if the buyer basically wants to sell, he would basically break down, but he didn't want to do it. So what he did, he holds the position. Basically, he's putting all the money right here, not to sell. Not to sell, he's holding position, making sure the position is going to go much higher. So as I said before, 126.13, once the level is going to be broken, the most amazing part and the most important thing, if it's going to stay above the level, only then we can say the buyer won. So for us, the most important thing, it's got to stay above the level, and only then we can say basically the British pound looks very strong. Let's go to Japanese yen. As you see, Japanese yen had a very big run, and it stays above the level. This is the previous high for the Japanese yen. And if basically it's going to stay above the level, it has all the chances to go much, much higher. You see, that's the Japanese yen. We're going to go one more time to oil. And as you can see, all of these levels was drawn before. I just want for you to see, we draw this level 44.40 away before. If you're going to follow our recommendation, as I said before, go on our website, gerchikcompany.com, and watch our videos, become our YouTube subscribers, and you will see all of it in the real life. So this is all of the levels that was drawn in the real life. So as you can see, take a look. This level was drawn way before 44.40, and take a look how strong we were staying above the level. But as you can see, once this level is broken, 44.40, we have all the chances to go lower for one simple reason. Everybody was buying it here because it was staying above the level. So right here, this move will be initiated by short sellers and for those people who was buying the position right here on the long side. My dear friends, what I want to tell you, I usually don't like very big webinars, and we would like for you to participate and ask the questions if you have. Today, I showed to you how the buyers and the seller works. And the most important thing for you, as I said, you got to draw the first levels. And once you draw the levels, only after you draw the levels, you have to understand who's staying above the levels and who's staying behind the levels, below the levels. As of today, our webinar is over. If you have any question, please ask in our group. But what I would recommend you, add yourself to our Facebook group, add yourself to our Instagram, add yourself to our Gerchik Company website. The most important thing, you're going to see everything what we're doing in the real life, and then it's going to help you to make money. It's been Alexander Gerchik, the president of the Gerchik Company, and a very good trader. Thank you very much, and all the best to you.